Good morning, 10%ers. This is Michael with Trading Escapes. You can find us at tradingescapes.com. It is Wednesday, December 26, 2018, the day after Christmas, the holiday season in full effect here. We are trading another day of the December of Discipline, where we trade our beta name stock using our plan, strategy, idea, execution, and management to find consistent gains in the stock market. So we have about 8 minutes to the bell. The market is in a full-on bear market. If we want to call it a crash, we can call it a crash. It's looking very dismal. Check out the SPY here real quick. You can see we've hit down to that 230 mark, and if we back it up even further, let's go to a 5-year. We're just in free fall right now. So this 230 mark right here at this pivot is definitely a level we're looking at. Then we're looking at around 200, and then 200, then it drops down into the 180 level. So 180 is about 4 years ago. So this is 2018, 2017, 2016. So at 280 levels in 2016. About 3 years ago. But I mean, you can just look at the SPY here to get a gauge of really how things are. And I'm sorry, I'm just a little bit under the weather. I mean, this is what we're seeing since October. Here's the October range, and this is what we're seeing. As you can see, in the last 5 years, we don't see anything that even compares to that. Earlier in the year we had a bit of a sell-off, then it rallied to all-time highs up to almost 300, and now we've gone from that 294 level all the way down to 234 approximately now. So definitely in a bear market. What that means to us, we're just taking a look and keeping an eye on things. We're going to trade the way we trade, trade the technicals, and trade our plan the way we always trade it. Here's the thing. With this current setup that we have, what we're using, if the volatility isn't in the market, then we're not going to have a trigger, then we're not going to have a trade for the day. So it's either there or it's not. So the market's going to tell us what we want to do. So we've got about 6 minutes to the bell. We'll be right back with it. Three, two, one, and there's the bell. Can get my other station set up here. It's looking good. All right, so as normal, coming to the morning, we're just watching our levels, looking for the volatility range to see if we can have a setup for a trade. Got our bottom marked off here. Tops at trigger is at 38 right now. 1738, that is. $59's at the bottom. look at some daily levels on here. Obviously, we're sitting at 16, a little over 16 and a half, and we've got this daily level down here at 16 and a quarter. So we'll see what happens today in the market, see if we make a little rally, pull back down to this level. But it's pretty clear open space. All right, so we're not a whole lot of volatility, no range coming on here. First 3 minutes of the day at least. Just have some levels set for alerts. And a slight pull to the downside there. Putting in a big red candle, relatively big compared to what we saw earlier in the morning. We're just going to move this down to our trigger at this point because this should not be a runner. So when we trigger, we're going to have to wait for a small pullback. So again, this is December. This is all about, it's not necessarily about the profits. It's about looking at what we're trading, how we're trading, how the plans are built, how the strategies are implemented in those plans, what the difference is between a plan and a strategy, and just trying to come up with those things, how to build a plan given different strategies that you come across, either if it's somebody else's or something that you've come up with, what the components are in there. And that's what December has been about. We've kind of come up with the fact that the strategy has your pattern recognition in it. It has your has the overall idea, your stocks, and in that idea it's got your stock selection. You've got your execution within that. How are you going to execute? Right now we're in the execution phase, right? So we've selected the stock, we're looking at the stock, and we've decided these are the patterns or the technical components that are going to allow us to execute. We execute within that framework, and then we manage it. The management can be the stops, it can be how you re-enter, how you add, how you take partials. All of that becomes the strategy. And adding it to the plan basically tells you how many trades and when you're going to trade, what your risk level looks like. So the plan says, given this strategy, I'm going to trade this once a day in the morning over the course of a month at this risk level. And if X happens, if percentage comes in, I will go to Y risk level. And then basically phasing it in as you approach a new strategy. So I'm going to trade 1,000, then I'm going to trade 3,000, then I'm going to trade 6,000, and then I'm going to trade full size. Excuse me. I'm sorry, guys. I'm just a bit under the weather. And I'm just marking that bottom level for no other reason, it's just to do something, because we're just sitting here waiting. You know, I don't want to say that once you have your plan and your strategy that you don't think as you trade. Obviously, there's analysis going on at all times during the trading. But at least for this past month, what I've found is that's exactly what gets me in trouble every single time. You know, for instance, on Monday we should have had a $300 green day, and the reason it wasn't because the plan and the strategy didn't work. It was because in my head I'm saying this is a bear market. This stock is going to go down. It's going to go down. It's going to go down. And the first thing it did is it ran up for profit in the morning, and I didn't get that profit because I was too afraid. I panicked because I thought it was going to go down. Okay, so we've triggered there. Actually, we triggered right there. It seemed like that trigger point was a little bit off. And we're looking at this 9 level as an entry point. We didn't get an entry there. Sorry about that, guys. Took an entry at 57. Hoping that works out for us because we should have had an entry in the higher 60s. So we'll see what happens. Where's the triggers at 59? Create an alert at the point where we'll adjust our stops. So we've hit that 20-cent pull down from the trigger, which means that we will go flat on this trade if it decides not to run our direction. The key is not to try to turn it into a green trade, is to follow the rules and to go flat, because we could pull right up to that level and it could peel back around and hit our target. You know, what kind of is difficult is our target's right above that, you know, that intraday or that daily level. And so we're having to pull back to the 9. What's frustrating with this trade probably right now is that if we had had our proper entry, we would have hit our profit target, which is the only thing that makes me, there is a piece of me that says I should take profit on it because we did actually hit our profit target given the strategy. We'll just have to see what happens. At this 33 level, I'm sure our other entry was above 33. I think we were trying to get it at 65, 64. So we should have hit profit down here. Let's see if we can break the 33 level here. Could be an interesting trade if we get down to this this daily level. I'm still holding that 33 level. Just cracked it. We'll pop back up. So unfortunately, we're probably due for a little test of the 9 and the 20, so we'll see what happens here. And right there, it cracks the 9. I'm really tempted to take profit on this because, like I said before, we already did hit our profit target if we had had our proper entry. You know, you can't always say that I'm gonna, if we don't have, if the execution's off, which it was, then you can't just automatically say, well, I'm still gonna get the same profit target. You know, we should have had an entry as we pulled back from the trigger point. Instead, we took an entry past the trigger point because we weren't getting filled for some reason. And I don't think it had anything to do with share availability. I think it was think or swim was the issue. A lot of buyers at 35. See if we can, 36, see if we can't get them to disappear. Kind of disappeared there. Still at 36, now they're at 37. Just keep stacking up higher and higher. So we jumped out there as it's coming back up. We're just having a lot of consolidation. So we're going to, like I said, we had that bad entry. Should be a $300 day. I don't know if we did anything wrong. It's really hard to say. I'll have to go back and actually look at the video myself. But we're up 170.50. We'll take that for green day today. That's going to be our one trade. It's really disappointing that it wasn't a solid 300 full profit target green day. But given the market, you know, it is what it is. I'm gonna pause for a little bit. I just want to see what it does. If it pulls up to the 9, how it reacts. If it pulls back down to if it pulls up to the 20, comes back to the 9, and see what happens. So I'll pause just for a few minutes. So we pulled down to our daily support line and bounced right off of it. Look at that. Boom. Right off of it, back up to the 9. almost to the penny. They literally, I think we missed it by 1 cent. Okay, 10%ers, I think that's going to do it for the day. We followed our plan. We had one trade for the day. We're green trade. Unfortunately, we didn't get all of our potential out of this trade. We'll have to go back and review, see why we didn't get filled. But, you know, it does make up for the loss on Monday. So, you know, we're basically at about a wash for the week, which is, you know, we've had profits throughout the month. So we're fine with that. Hope everybody's in the 10%. You know, be super careful in this market. I keep hearing people talk about, you know, this is the bottom, we've hit the bottom, and, you know, everything's a value buy. It is, from an investment standpoint, it is a value buy. If you're looking to buy AMD at a good price, you know, is $16 a good price? You know, if you cost average into it, you know, maybe it is a good price. You know, buy some now, buy some next week, buy some, you know, if you want to buy 1,000 shares, buy 250 now. Wait a couple weeks, buy 250. Wait a couple weeks, buy 250. You know, this is for investing, you know, long-term holding. You know, what we're doing right now is intraday trading, and I don't really care if this is $16, $100. I'm talking, all I care is this has range and volatility, and I can read that in some way, get an edge, and make some trades on it. So, you know, it's there's just people out there going, oh, this is the bottom. I'm gonna pile in because I'm hoping that it goes higher. It could go higher a couple ticks, and then it could drop another 50 ticks. So, and then that could be the bottom. So again, just you know, be careful, and you know, if it's an investment standpoint, great. I mean, let's look at AMD from you know, let's stretch this out. Stretch it out over a couple of years. You know, so, you know, if you look at this and go, oh, this is at a great price. It's at a great price compared to earlier this year. But overall, you know, it's still way above, you know, here's 2017. You know, and this is the big rip it had up in 2018. So, you know, the mean price for 2017 was about $12. So we're at $16. So it's all relative. So be careful. You know, I want to buy a bunch of shares of this for an investment to hold long term at $16 because it's such a great price. It hit $30 earlier this year. Well, I mean, we all know how this works. We have these big rallies over the course of a year or 2 years. They pull up, it crashes down in the bear market, and it takes years to recover, right? The panic's always much faster than the greed. So, you know, what if we buy here and we're like, oh, we're at $16, then it crashes down to $12, and then it slowly, over the course of a couple of years, ticks back up and gets back up to, you know, $20. How long is it going to take to do that? How long did it take to do this? You know, it was here at $6, then at 12, then it spiked all the way. You know, that's a couple years. So if you're looking to hold for a couple years, great. And is this going to happen again in one single year on this particular stock? You don't know that either. Maybe there's just normal 7% growth on it. So all I'm saying is, you know, if you're going to get in from an investment standpoint, use a strategy for that as well. You know, just don't blindly think that somebody knows the bottom of the market. Don't be going out to MSNBC or any of these other, you know, news outlets, quote unquote, that are telling you what's going on. If they were right, then none of us would be sitting here. We would just turn on the TV, listen to what they say, and go act upon it. That would be the edge. That would be the strategy. So, you know, they're just parrots. They're just speaking. You know, one says one thing, another one has to counter it or say the same thing or agree with it. You know, they are in business to make money, and the news is the product. So they have to have some sort of news every single day. So, you know, take it all with a grain of salt. with all of this, what we've learned, what we are learning, is that it's a numbers game, it's a math game. You have to be smart about it. You have to be calculated about it. Does intuition come into play? Absolutely. Nothing can really outdo human intuition, especially in a situation, in a market that is somewhat fueled on human intuition or emotion, greed, and panic. So there's computers trading, but there's also a lot of humans trading, and those computers are their algorithms are based upon those emotions as well. So anyway, it is Green Day. Hope everybody's in the 10%. I will see you tomorrow. Have a good day. Don't work too hard, and enjoy the holiday season. See you guys.